Okay, this video is about reality. So I'm going to give something a shot here. I'm not sure how this is going to turn out, but this is my best shot. Okay, so if I can get this slide, there we go. So reality. Reality is all that is real or exists within a formal system or logical system. In what I'm trying to explain here, reality is about agreeing to agree in order to achieve some objective. I'm not talking about the reality the way people talk about my reality versus your reality, or there is no reality, just interpretations, personal interpretations of some phenomenon. I'm not talking about the debates that scholars and philosophers and theologians have about truth. I'm not talking about subjective interpretations. So what I'm talking about is closer to what I believe William Kent was discussing in his book, which is a very good book and I highly recommend it, Data and Reality. So the bottom line is that we want to come up with a common enough view of reality in order that we can get some work done. That's what we're trying to do. So, logic is thinking according to a set of consistent and coherent rules. So all parties in this system that I'm talking about, they understand what the rules are, and they try to look at those rules consistently. A theory is something that describes the world, principles by which the world operates. So a theory can be right, or a theory can be wrong, but the intent is to discover the essence of how something works. So a logical theory is a communications tool. The objective is to communicate, not to obfuscate. So I'm going to give that by definition. Now, there are people that want to abuse the system, and I understand that. I'm not naive enough to think that doesn't go on, but that's not what we're trying to achieve, okay? So a logical theory is about enabling a community of stakeholders trying to achieve a specific goal or objective, or range of goals or objective, to agree on the important common things to make that logical theory work. That's what we're talking about here. That's what we're trying to achieve with our reality. So what we're talking about are formal truths. So we're not talking about, did George Washington chop down the cherry tree? That's not the kind of historical truth we're trying to talk about. We are talking about accepted things, formal truths. For example, a formal truth is assets equals liabilities plus equity. So humanity and society has been able to do accounting using a formal model because they agree that assets equals liabilities plus equity. So that's what we're talking about here with this logical system I'm trying to describe. We're not talking about subjective correctness, that academics and auditors and regulators and standard setters and politicians, can argue about. That's not what we're talking about here. We're talking about facts. So, for example, assets for the consolidated legal entity Microsoft as of June 20th, 2017 was $241,086,000,000 expressed in US dollars rounded to the nearest $1 million. So that's a fact. If we can't agree on that, then we can't do financial reporting. And I'm not going to go down. That's all that I'll say about that. You can argue about whether or not something included in that total is truly an asset or not. And external financial reporting managers and auditors and regulators and financial analysts fight about that stuff all the time. But what we're talking about is the fact that is there right now, that is in the number, that is represented by that fact. That's what we're talking about. And correctness is determined by having some specific set of rules. So I don't know what the correct word is. I was advised against using the term reality. I'm looking for an alternative term. The best thing that I could come up with right now is the term realism. But this is what we're talking about. Realism is the quality or fact of representing something per some standard agreed upon set of axiomatic rules. So axiomatic means that a machine can process those rules, such as a computer. And they're commonly held, grounded truths that can be tested. You can test the statements against the rules and see if something is true or false. And then this continues on to talk about syntax, etc. And within the context of some set of stakeholders that are agreeing on something in order to achieve a goal or an objective. So a general purpose financial report is a communications tool. It's high fidelity, high resolution, high quality. And people have been using that mechanism for years to exchange information. There are different reporting schemes. The reports have qualitative information and quantitative information, and they have rich financial reporting standards that explain what's in those reports, US GAAP, IFRS, etc. And, the goal, I'm not going to read this to you, the goal is for an economic entity to create a report, give it to a regulator or an analyst, and for another entity B, to do the same thing, and then for them to be able to do something useful with that information in order to help the capital markets function effectively. So, and there's low to zero tolerance for error here. You can't not comply because you can't make a mistake, because if you're make a mistake, you're not complying with the rules. And accountants spend a lot of time making sure information is correct. And if you're going to automate these processes, you have to make sure that things are correct. So we're trying to get rid of the mundane, gruesome, grueling processes related to rekeying information or having to memorize a bunch of stuff so that you can figure out how to do things. And we're trying to automate some of this so that we can do it more effectively and at lower cost. And a lot of work has been done to make this financial information exchange work. Conceptual frameworks are written that provide common premises, precise terminology, things that limit judgment and discretion, things that impose intellectual discipline. These have been in place for 100 years and been tuned over the years, and these things can be leveraged to automate the process of financial reporting. So comparability. People think that you can't compare things. That's not the case. Fundamentally, financial reporting is built so that you can compare, but things are not uniform. Here, this is a good statement about comparability. This is in the Conceptual Framework for U.S. GAAP. So these 5, 1, 2, 3, 6 points are, there's a lot of thought that has gone into these things, and they're there for a reason. And this is not about creating cookie cutter forms that companies have to put their financial report information into. This is about creating a scheme. And yes, it's harder than dealing with forms, but that's life. That's what you have to deal with when you're dealing with financial reports. They're not forms. They don't need to be forms. They don't have to be forms. So I'm going to call that good, and I'll probably do a better job on this later.